families that are in pre-foreclosure. And I door knocked last week on a house, and sadly I didn't have enough conviction or convincing to a family that had children, and their house went to auction, and that just crushed me. So I'm going all in on this. This is my sole focus. I want to make sure that we can really help families that are affected by everything. What would you say got you started in this? And let's just kind of jump into what's happened in the last few weeks since we had an episode with you last.
Yeah, it's been it's like I was telling you guys, like it's been a wild last 2 weeks. It has. It's I mean, we were on here and I was like, oh, okay, like there's always short sales, they come, they go, things like that. And then that happened. The banks, all of a sudden we had the failure of SVB, and then we had Signature. Like most people don't even know that Signature was like quietly closed in New York on a Sunday. Like it literally, how do you get fired on your day off? Like you're closed on a Sunday and you got shut down. So that was pretty wild to me when that happened. And then people that are much, much smarter than I am, luckily will share information with me. And they kind of let me know that Credit Suisse was on its way out. And they're like, look, this is definitely something we want to watch, because as terrifying as Signature Bank, or not, SVB was, Credit Suisse holds like 4 times as many assets. And that's a big, that's a big global lender right there. And as soon as like that, and like the thing that's funny is most people are like, oh, well, UBS came in and bailed them out. I don't know how many people are aware of that or saw that yesterday. This is the thing that's wild on that, though.
Okay, you know what? I kind of want to recap because I'm not even sure. I didn't know about these other extra banks. What has been happening in the last 2 weeks, just for people that are going to be listening to this and not watching us and maybe didn't catch the last episode?
Got it. So and I apologize. Sometimes my brain just goes into
I'm going to jump in. I'm going to be a moderator. I'm going to break it down for me.
Thank God. Just tell me to pause every now and then. So
I got you.
What essentially happened was, and for those that were around in 2008, it was very similar to that. What happened was it was a run on the bank. So what happened was the bank had, and to understand this, you have to look at our banking system as a whole. We have what's known as fractional lending. So the bank, for every dollar that's there, they can lend $10 conservatively, and they're in a good spot based on their deposits that are there. The issue that you run into is when you go above that 250,000 threshold for like a personal account, all of that money is uninsured. So if there's a run on the bank and everybody pulls their money at once, the bank, because they have so much that's out, they just collapse. And they don't have the money on hand to be able to actually give to all their customers. So it's actually a really terrifying thing. So the way that this one was equated was back to WAMU, Washington Mutual, when it collapsed in 2008. I mean, when this happened, I literally texted one of my lender partners and I was like, dude, this has some really, really, really 2008 vibes to me. I know that it's a little different, but man, this is feeling really similar. And he was like, yeah, he's like, this ain't the first. He's like, this won't be the last one. And then literally 2 days later, the same thing happened. And then, like I said, it's just progressively gone from there with Credit Suisse. And then there's some rooms that, for example, he's involved in that are some of the smartest dudes on the planet when it comes to lending, mortgages, mortgage-backed securities, things like that, where they're like, look, this is the tip of the iceberg from what we're seeing. There's going to be some big names that are going to follow right behind this. And I think you already saw, or it's been going on, Republic Bank, JP Morgan kind of threw down a lifeline. But the thing that's interesting that most people kind of aren't taking into account, everybody keeps saying the banks aren't being bailed out. We're not bailing them out, because let's be honest, like that's got a horrible connotation to it, especially going back to the Great Recession. Like that leaves a really bad taste in the taxpayer's mouth.
Yep.
Instead, and this is the thing that's kind of twisted, is this go round, we're not going to bail the banks out. We're going to make sure that the people that bank there are going to be made whole, which sounds great. Like on paper, that sounds fantastic. Like, oh, cool, I got $3 million in a bank account. I'm getting $3 million back. What they're doing though is they're doing an equity strip. So if you say that there's stock in that bank of, I don't know, just say there's like $1 billion worth of stock that's out.
Okay.
All of those investors are wiped out. They're gone. So if you're a stockholder in that bank, you're gone.
No more.
No more. Like if your portfolio said that you had 5 million in stock that morning, you're now at 0. And that's the thing where when they're saying like, oh, hey, we're not going to do this to the taxpayer. Well, you just did it to Main Street though. Like, let's be honest, most of your people that are involved in stocks are your 401ks, your IRAs, your Main Street, your people that are just trying to get ahead. And they're just completely wiping them out. And like with SVB, I think it was something ridiculous. It was something like $2.8 billion was just wiped out. Like it was gone in 24 hours. And I'm like, damn, okay. So it's one of those things, like looking at where the banking system is right now, I think it's extremely fragile and you're going to see more go over the edge. And I think the federal government, and like, this is one of the things, like, I know that everybody likes to pick on Powell. And like, let's be honest, he has like the shittiest job on the planet right now, being in charge of the Fed, because he's damned if he does and he's damned if he doesn't. Like,
there's no way to win.
You got Yellen sitting there being like, we should fire him. And it's like, nope, like, dude, you couldn't pay me enough to have that job.
Mm-mm.
He affected, and I'll give him credit where credit's due. Today, he effectively said, we are committed to getting inflation down where it needs to be to right the ship. Because he effectively said, look, we know there's kinks in the armor of the banks right now. Like, we're seeing that they don't have enough on hand to cover their deposits. You know,
and let's talk about why. Matt, you can see the comment below. Why is there not enough in the banks at the moment to cover the deposits?
Because when COVID happened, we did quantitative easing and we effectively dropped the Fed funds rate to 0. So, I mean, it was banks could just pass money back and forth and we literally were just printing it. That's all that we were doing. And like, this is something that's wild. This goes all the way back to, I want to say it was early last year. One of my lender partners had said to me, this isn't going to be good when the hangover comes. And I was like, you know, at the time, like, I'm doing 70, 80 deals a month for a hedge fund. And I'm like, look, like, dude, I'm just going to stack it while I can. And then whatever happens, happens. And he's like, I don't think that most people understand where this is going. When the club shuts off and we're not serving drinks anymore and the lights are on and you got to go home, there's about $14 trillion that has been printed in the last 2 to 3 years that we have to cook off to get inflation back to 2%. Like, we're not talking like, hey, we need to go lose $100. Like, you're talking like, we're up here and we need to be down here.
Sorry, the most we've ever printed ever in the ever.
Like between, I think it was like between when the Federal Reserve became a thing to 2020, we had printed something like, I don't know, it was something dumb, but it was like $8 trillion or something like that. From 2019, 2020 to 2022, we printed like 14 trillion. And, you know, that was the government stimulus checks and all that stuff. So when that happened, what happens is you have to offset that with something. And it's going to be pain. They're going to bring pain to the table. And you're starting to see it. You're seeing pain in banks. You're seeing pain in Main Street. You're seeing sellers that, okay, like, crap, dude, I'm living paycheck to paycheck. And I just got cooked off my job. And, you know, all these jobs are supposedly being added to the economy, but I'm looking for work and I can't find anything. And all of a sudden, like, you're starting to see it. The Fed, their only thing that they have to combat all of this is destroying demand, which is what they're doing. They're destroying demand by raising that Fed funds rate. And in doing so, they're also cooking off the equity that's in the housing market. They're cooking it off with the equity that's in Wall Street. They're also cooking off a lot of the equity that's in the banking system. And it sucks, but they're gonna take it down brick by brick. They will, until they get things where it should be, had we not had that once in a lifetime event of COVID, the pandemic, quantitative easing, 0% interest rates. I mean, for the love of Christ, when you have like multi-billion-dollar corporations borrowing billions of dollars at less than 1%, like, that's insane. That should never work for any banking institution. And then all it takes is like one small increase in interest rates, and now you're operating at a loss based on your interest payments that you're getting from them. You're at a loss.
Right. Right. So here's a graph that I quickly found. 35% of all U.S. dollars in all existence were printed in a matter of 10 months. 35 months, 10 months, 35%. That's an extreme circumstance. Obviously, the pandemic did some crazy, crazy things to us. And now, to your point, we're in the hangover stage.
Yes.
So what is coming of this? Like, what are some of the effects of this impact of what we've done to ourselves?
So what we're seeing is, and this is what I'm seeing, and I'm in a lot of different markets nationwide. I mean, Phoenix is my primary market, but since I do short sales in all 50 states, I see it in other pockets as well. So the first thing that we're seeing is, and this was something where SubTo and short sales kind of almost go hand in hand. Say that one of the people, say that a borrower lost their job, right?
Mm-hmm.
It doesn't matter how good your interest rate is. If you make $0 a month, you can't pay your mortgage. I don't care. Yeah, your interest rate can be 2%. It doesn't matter. So one of two things is going to happen there. A, you're going to sell that property, and maybe you're going to get your equity out of it, and you're going to go rent someplace for a while. Or B, depending on when you bought, and Ingrid, we've already run into this with several people, you might be at that break-even spot, or you might be underwater. And if it doesn't cash flow on like a SubTo or a wrap or something like that, well, hi, I'm here, and I'm here to help you. And then you're going into short sales, and people are like, well, there's only going to be like a few of those situations. And I beg to differ on that one. There's going to be a lot more of those situations than people think, because if anybody thinks that we're in the thick of it right now, the thick of it just started the other day. And that's the tip. Like, we haven't even gone underwater on the iceberg yet. Like, we haven't seen what happens when you have real life implication stress tests of your largest banks in the world. What happens when you're looking at Deutsche? What happens when you're looking at HSBC, Wells Fargo, B of A, Chase? Do I think they're all going to collapse? No, but I think you're going to start to see where their faults are. And inherently, depending on the lending institution, and let's be honest, when money's cheap, like, hey, it's a good idea. Like, dude, let's just give everybody loans.
Mm-hmm.
Now you're starting to see some of that come back. And now people are looking at it. And I have people that, they bought 2 years ago, and people are like, oh, well, shit, they're in a great position. No, they're not. They bought 2 years ago
at the highest price.
They may have bought at X, and they paid $25K above asking, because that's what the market was. And it didn't matter. They got the appraisal. And they were only putting 5% down. So they were already 20% above, or, 20K above that. Well, now if the prices come down 50,000 on that house, okay, you're underwater. Like, you are. You may have a bitch in interest rate, which is great. Maybe we're selling your rate. We're not selling your house. We're selling your rate and your loan that's there. That's what it is. And you're starting to see that. And a lot of people to that point will sit there and say, okay, I'm still not going to see short sales. You say that until a notice of trustee sale shows up. Notice a trustee sale shows up, all of a sudden it gets real fast. And I literally got a call from a gal this morning on a property in Florida. She's an escrow officer here in Arizona. She works with a nationwide buyer. And she called me and she's like, yo, she's like, do you do reverse mortgages? And I was like, yeah, all day. And she's like, I'm going to get this lead over to you. She's like, if you can kick us a referral fee, that'd be great. Let me know. She's like, there's nothing that we can do with it because it's a reverse mortgage. Just get it short sold. She's like, she's underwater by 150 grand. And
man.
I'm like, okay. And like, we're talking Florida in, what was it? I think it was like St. Pete or maybe Tampa. Those are hot markets. That's not like that's a shitty market where there's been like a
Can we buy it? Could we buy it?
That's where I used to live before I came here.
Yeah.
Can we buy it?
I'm literally waiting on all of the I'm waiting on all the information on it to get into my inbox. But once it's in, yeah, I'll shoot it over to you guys. You guys want to take a stab at it? Take a stab at it. Like but like that's one of
those are very hot markets. For that to be underwater 125,000, is that what you said?
Yeah.
That's unthinkable. That's crazy.
And like that, and that's the thing that's wild is there's always those one-offs, and people are like, well, it's just one off. Yeah, it is. It's just one until it's 2 in the neighborhood, and then it's 5. Mm-hmm. And then the next thing you know, you start to see a pattern. And like I'm already seeing that with some of the areas and locations where it's, okay, you go in, Monsoon, our tax records that we use here on the realtor side. All right, in certain areas, it gets lit up. There's, 17 properties that have red, above it. Okay, you're in pre-foreclosure. Now, out of those 17, only half of them may make it to the table of short sale or needing to be sold. But that's kind of that forced inventory that the government is looking to create of we have to sell these homes. Like we got to move some more inventory into the market. And how do you do that? You create unemployment. Think about it. Like, I mean, the other day this came out. I got a message from one of our lender partners. Amazon had come out 2 months ago saying we're laying off 18,000 people, and I was like, oh shit! Like, but Amazon's a huge corporation. Mm-hmm. That's 18,000 people that don't have a job and are looking now. Mm-hmm. Literally, I think it was like 3 days ago, Amazon
9,000 more.
9,000 more. They're laying off 9,000 more. Now you're talking about 27,000 in a 2 months span. Like, that's something that you need to keep an eye on because, like I said, is every one of those people going to end up in foreclosure? God, no. Is every one of those people going to end up in a short sale situation? No. Are there going to be some though? Yes, absolutely. There will be. And that's just, it's playing the percentages that are there. So it's wild watching kind of what is happening because it's very, like I said, for me, living through it and working through it, there's a lot of 08 vibes without toxic loans. Like everything else feels really, really, really similar. And it's not even that the loans aren't toxic. If anything, the loans are so good that people are trying to do anything they can to keep them, through SubTo, through assignment,
assumable.
So assuming, yeah, that's where I was going with that. Yeah, whatever.
No, you're good.
Assumable loans, things like that. And it's one of those things like looking at that, there's only so long that people can hold on before they have to let go. And that's going to happen. And if it passes through and the rate stays there through, being assumed or SubTo or wrapped, great. But there's also going to be a lot of that's going to get cooked off and it's going to have to go into the marketplace as inventory and it's going to sell in one form or another. Like I said, that's kind of what I'm seeing at the moment and kind of what I'm tracking.
So Matthew, I'm curious. I mean, I know we talked about last time you were on here. I think we said there were 1,600 houses in pre-foreclosure in Maricopa County. Do you have an idea of like what's happened in the last few weeks? How many more people have been triggered nationwide? How many, I guess I should rewind. Do you know how many mortgages are in default in the United States at the moment or roughly?
I don't know the exact amount, but I'll tell you this. I think at the beginning of the year, it was something like it was less than like 1%, which historically speaking is great. Like you're happy seeing that. They came out with something that it was up like 0.7. Like, okay, like that doesn't sound terrifying, But think about it this way. If there's 10 million homes and you're at 1%, what is that? A million homes? Something like that? I don't know. 100,000. Sorry, that would be 100,000. Okay. If it goes up 0.7, you just threw 70,000 more homes into the mix. That's a lot. Like that adds up very, very, very quickly. And that's what they're starting to see and what they're starting to track. The other thing that's interesting to me, because my brain is wired completely different than most people's. So, one of the most notoriously risky lenders out there is Flagstar.
Okay.
They're not known for being, cream of the crop, grade A paper on their loans. They were just put on a federal watch list for defaults on loans for their borrowers.
Oh.
And I was like, okay, that's interesting watching that. Now they go on and off this list a lot. But again, looking at what the last 2 years was, most of those loans should be pretty easy to sell from the aspect of there should be equity in the homes. But you're starting to see the equity strip out on a lot of these properties. It is
losing value in the homes because the affordability is gone. Less people are buying, prices are dropping, and there's no more equity when you go get things appraised. So, Matthew, Ingrid, I'm going to let you jump in after I ask this question, but I've been door knocking a lot right now, and that was one of those things that scared me. It was nerve wracking. I was always the person who would close and help people over the phone. I've been door knocking a ton, and it's just the stories I'm hearing is awful. I want, obviously, if I can, if any way possible, I'd love to keep a family in the home, but they don't have any money. They can't catch up the mortgage. They've been denied a loan mod because these banks are behind. So many people are applying to get loan mods right now. They're having a hard time getting a hold of the bank. It's impossible. So I know that you have direct contact to banks. Like, what are you seeing in this moment? And like, when you're talking to homeowners and you're trying to help them out, what is your strategy?
So it's super ironic because honestly, I had a seller who I was really hoping I'd be able to do a live call actually on this with this seller. Mm-hmm. He ended up calling me at 2 today and he was like, bro, I know that you want to put me on this. He's like, but I just need the package now and I need to get started. Like, I'm terrified that I'm going to end up in foreclosure. And I was like, well, dude, it's like 2 hours. Like, not a lot is going to change. And he's like, yeah, no, I got to go now. Like, give me the package. I was like, all right, I ain't going to argue with you. Like, okay, fine. Mm-hmm. The thing that I'm seeing, and this is the thing that's very interesting, and a lot of this flies under the radar. Nobody makes mention of any of these things because if you do, it's similar to, oh, hey, I don't think our bank has enough money in it. I'm going to go pull all my money out. You hear that. And it's like the old game of what the hell is it? Telephone, where like by the time you get to like person 50, it's like a totally different story. Mm-hmm. So what I'm hearing from people that I trust at the lending institutions, they've ramped up their loss mitigation because they know this is coming. And what that is that's their loan mod and their short sale department. Right now, their loan mod people are trying to do the best that they can. Here's the thing that I'll tell you with loan modifications. Inherently, it's something like 90% of them end up failing. They do. And it's kind of, you're putting a Band-Aid on a gunshot wound because you're not treating the...
And when you say failing, you mean they're applying for these and they're not getting approved, or they're applying for it and then they are getting auctioned off after the fact?
A little bit of both. So for example, and this is the way that most banks work. They work off of what's known as a waterfall system. That's one of my little keywords, waterfall. So they'll start off with, hey, can we just take the missed mortgage payments, slap it at the end of the loan? Will that benefit the borrower? Oh, okay. They had a temporary loss in employment. They're reemployed. Okay. Yeah, let's do that. If that doesn't work, they do what's known as a deferment. They'll just move them they'll move all that missed stuff and put it as like a non-interest bearing second mortgage on the property. And then whenever they go to sell it, it just shows up on title and it gets paid.
Gotcha. Okay.
The next thing on the list is they look at a loan modification. Now, here's the thing with loan modifications. and this is across the board. If you think the bank is going to do anything for you that's not going to benefit the bank, you are wrong.
Hang on, can you say that one more time? I want to make sure that we're all hearing this, because what?
If you think that the bank is going to do anything for you that will not benefit the bank, you are wrong.
Okay.
And they are going to, they'll keep you in that damn loan for 50 years. I've had people that have done loan mods where literally their term was extended to 50 years and 2% interest rate. And
because you know what's crazy about that? Sorry, I have to cut in. That the Dodd-Frank Act and the SAFE Act, I don't know which one, says that you can't amortize over 30 years. So to see these other new products, it's like, well, how does Dodd-Frank work against that kind of modification? Is it because it's not the initial, it's the secondary, it's to try to save you?
So it's that. And the other thing is, and again, this goes to literally what I just said about the bank will do what's in the bank's best interest. Think about it this way. If you go and buy a property as an investor, right, and you turn around and you want to sell that thing 5 days later, you can't accept FHA financing, can you?
No.
But guess what? If the bank takes that thing on a foreclosure and puts it on the market 5 days later, boom, FHA financing, no problem. So they play by their own rules. They do. They have their own set of rules, and it's figuring out how to navigate those. And I call it use your enemy's strengths to your advantage. Like, okay, that's your strength. Like, fine, you're going to do a loan mod for 50 years. That's great. But let's break it down and let's actually look at it, because usually it's chock full of fees. There's usually like an escalation clause through the period of time. So it's like first year, your loan payment's $300. Second year, it's $500, whatever it is. And it gradually steps up. And then by the time you get to like year 3, 4, guess what? You're paying more than you would have been had you just kept your original loan. So when that happens, people look at it and they're like, dude, screw this. This doesn't make any sense to me. Like, why would I do this? What happens if the economy's worse? Like, what happens if the economy's worse in 5 years? What do I do then? Well, and this is one of my goofy sayings that I say that I'm sure my wife would like happily drown me in a bathtub for saying this so much, but it's true. It's better to dance with the devil you know than the one that you don't.
Mm-hmm.
So for me, I'm like, look, 5 years from now, everything may be hunky-dory in your life. Hell, you may have won the lottery. You could be in a totally different position, good or bad. So the devil you know is the one right now. We can short it. We can rip the Band-Aid off. We can be done with it, and we can move it down the line. 5 years from now, you'll be in a position you can go buy again. You can go buy anywhere in the country. You can utilize any type of financing you want at that point. You can do conventional, FHA, VA, USDA if you're in the middle of nowhere and that loan program covers the area. And a lot of times for me, when I'm talking to sellers and I see sellers in this position and I kind of break it down that way, I'm like, think of how different your life was 3 years ago. Everybody, like, dude, all of our lives were different 3 years ago. I mean, 3 years ago, dude, we were all chilling in our houses. We weren't allowed to go outside. Mm-hmm. Like, literally, the world like put us in timeout.
Yeah,
it's a little bit different today. Mm-hmm. 3 years from now, it's going to be a lot different too. It will be, and that's what I always try to tell them. Like, I know right now it sucks. Like, it does. Like, you're in a crappy position. But that's my job, is to get you out of this crappy position. Let me be the solution to your issue and get you into a position where, you're financially free, more healthy, and things of that nature. So that's what, the other thing is for me that's great. And I tell everybody this, when you're talking to them, let them know this ain't going to cost you anything. Like, it's not. Like, that's the other thing, because let's be honest, like, there's a lot of people out there that are scam artists. Like, let's just call it what it is. There's a lot of people, and maybe not even scam artists. That's maybe a little bit harsh. There's a lot of people out there that are opportunistic. There we go. That's the word I want to use. And sometimes they use it in not a positive manner, But I always tell people, people will be like, well, how much is this going to cost? I'm like, nothing. Well, how do you get paid? I only get paid if it closes. I get paid because I'm a licensed realtor and because I have to do certain things with with the process so that I can get paid. So like if I go to foreclosure, I'm like, you're in the same damn boat. You are literally in the same boat that you're in right now. All you got to do is spend an hour filling out a packet of paperwork with me. The rest I do. Like everything else I do. So having that conversation with people, like once they hear that of like, holy shit, like, okay, like I fill out this packet of paperwork and I have a glimmer of hope. Whereas like right now, like, a lot of people, they're in it. Like people are in it and they're feeling it. And like, let's be honest, when you got shit going on in your life, you don't feel good. Like you don't feel good. And
you're depressed, you're anxious, you're overwhelmed. I can only imagine how bad it is. Like it comes back to me thinking about that family I was trying to help last week. If you have kids, the thing that was gut-wrenching to me, there were kids in that house and their house got auctioned off at a sheriff's sale. The locks were changed on their home. Like they're getting uprooted from their school. They're losing their sense of structure they had. They might not that killed me. So do something and save yourself a little bit, because also if you have that foreclosure on your record, you're messed up on your credit for 7 years. You're not going to be able to potentially rent places, get a loan, get a mortgage, a car loan. It can mess you up from some jobs with security. Yeah, you definitely need. I'm going to ask him one. Go ahead. I'll ask him my question next.
Well, what I was going to say is I short sold. In 2010, I had 2 children. We had a situation where, the market fell. So like our house we bought for $168,000 and we ended up selling it for $75,000. And this was in what used to be Queen Creek, and then they changed it to Santan Valley. They changed some of the zip code stuff. So it was off of Ocotillo and Ironwood. But for the record, I had no business buying a house way out there. But in my mind, we get drilled that home ownership is your way to build wealth. It's your way to actually, I'm an immigrant here. So it's like Americanize yourself, right? And so because of that short sale, it actually delayed my ability to sign up for citizenship, because it has so many factors once you do something, even from a short sale to a foreclosure scenario. Foreclosure is much worse. I knew that was something I may be impacted by. I may never get my citizenship if I foreclose. That was in the back of my mind. Now, short sale still delayed my ability to apply, but it was an impact. And so there's so many things. We always talk about mortgages and when somebody's going through this, but if you really want to honor and help somebody going through a pre-foreclosure situation, and you're able to help in this way, you should be asking, how are you buying groceries? What do you need gas money? And I'm not suggesting to pander out cash for those scenarios, but it is a complete impact to your life. It's not just your mortgage. And so we rationalize all the time as human beings. It's in our nature. So when you're rationalizing this huge stressful thing, you're like, forget it. I'm just not even going to worry about it. Let me go worry about how do I put gas in my car, how I feed my kids. I don't even want to deal with the huge stress that is this property. There's more important things in my life.
Let me just call you and ask you if I can buy your house for cash. Let me just tell you that I can buy your house for cash. Screw you. I just want to buy your house for cash. Could you guys imagine how awful these homeowners feel if you take the time to be genuine and just see how they're doing? I'm sure that's been a game changer for you, Matthew. And I know Ingryd has helped so many families you both have when we talk to them on the phone. Matthew, I know how many short sales you've done. What has it been like for you on the phone?
On the phone, and to your point that you just touched on, coming from the spot of, yo, I want to buy your house cash. I see there's a notice of trustee sale. They get that from 50,000 people, because let's be honest, once it's public record, it's nonstop. Boom, 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 boom. I mean, they're just getting inundated. When you come from an approach of, I genuinely want to help you. Like I want to help you. Like Ingryd was talking about, in their mind, they don't give 2 shits about this house anymore. Like they're checked out of the house. One of two things is going to happen. Either A, the bank is going to help me. Shit, we all know that's not going to happen. Like the bank is going to prolong your problem. I'm going to help you face your problem. The enemy of my enemy is the bank. Let's take down those bastards at Wells Fargo or, whatever banking institution. And once you have that common bond, all of a sudden, hey, look, and I had this conversation earlier today with a buddy of mine, and I talked about the power of we versus me. So the way that I look at this is, what are we going to do to solve this problem? Because now I'm like, if I'm talking to you, I'm invested into your problem. And like, I'm taking some of that and I'm shouldering it now. Like, you're not alone in this fight. That's what I'm here for. So it's not me wanting to buy your house or me wanting to sell your house or me wanting to do a short sale. It's, we are going to get through this. We're going to get the bank off your back and we are going to get you into a better spot. And as soon as you start using those terms, holy shit, the dynamic changes. Like, I mean, it's a 180 in their mind where they're like, damn, I have an ally in this, because before they're literally in the middle of the
on an island.
Yeah, exactly. They're alone up. They're not even on the island anymore. They fell off the damn island and they're in the middle of the ocean.
Yeah.
And there's no search and rescue coming. And then all of a sudden you're just paddling by like, yo, I got you. Like, hey, let me help you out. So like when I'm on the phone with people, this is the part that's kind of hard. And I will this is probably the part that I struggle with. I try to be emotionally disconnected. And I know that's not a good thing, but I try to, because the thing is, this is one of those things that is it'll get to you. It doesn't matter how many you've done. It will get to you, because if you're a human being at the end of the day, you give a shit about the kids that just got kicked, that may not have dinner. Like, dude, I'll be honest with you. I helped this lady over in Maryvale. I want to say this was 2021. I went on this appointment. This was after she blew me off 3 times. And this was a referral from one of my really good buy and hold investor clients. And he was like, dude, he's like, I promise you she's not blowing you off. She's just got a lot of shit going on in her life. And I was like, okay, cool. I went over there. I go over there. I see this woman who life has just absolutely smacked her in the face. Like, she is not feeling like she's not in a good spot. My wife is an amazing human being. Anybody that's ever interacted with my wife knows that I clearly married way out of my league, way. And she is the kindest person on the planet. She will give you anything off of her back to make your life easier. I text her and I was like, dude, she's here with like 5 kids and she's got no food. And she was like, cool, I'll take care of it. And I'm like, the hell are you talking about? Like, dude, you're over in Gilbert, bro. I'm in Maryvale right now. What do you mean you're going to take care of it? What did she do? She hopped on, what the hell is it? It's now Instacart. At the time, it had just been rolled out with like fries or something. She put in an order for just your basic necessities. It was a couple $100 worth of groceries or whatever. Puts it under her name. And then when I was leaving, I told her, I was like, hey, you need to run up to Fry's. There's a food order for you. It's already paid for. Go pick it up. I will tell you this. I got this woman's short sale approved. I did. I got it approved. I got it closed for her. Had that not happened, though, I guarantee you I have a friend for life with her. A friend for life. Just because of that small piece of humanity when she felt less than human. And that, I'm not sitting there saying, like, go buy people groceries. I'm not saying that. But I'm saying just show people humanity and you will get the best out of them. Like, you have to. So, like, when I'm on the phone with people, I try to not get super emotionally involved because it's hard. But I still have that humanity of like, look, we're going to do this. I'm going to be here with you every step of the way. You got me, you got Nicole, you got Marissa. That's my transaction manager who is friggin' lights out. We're going to get you through this. And like, sellers are like, well, okay. Some of them will even be like, dude, the bank already told me to go kick rocks. And I'm like, well, you know what? Let me waste my time and see if I can go ahead and get them to not kick rocks. Let me just.
And Matthew, Are there any other verticals that you also help? So one of the things that I recall from when I short sold is that not only did I have an acceleration in terms of the mortgage, but I also had it on my credit cards. My credit cards required, the due on sale that you have for your mortgage, you
Yep.
also have it on your credit cards.
Yep.
So despite the fact that I had never missed a credit card payment on the 2 or 3 credit cards I had, all of that got accelerated, because what they do is they reassess your credit score. And so as your credit score is going down, your credit worthiness is taking a dump, obviously. Do you offer any other services, or do you have any partnerships, or is this a opportunity for consolidation work for those other types of lines of credit that somebody going through a short sale may need to address?
Could be an opportunity. I had a guy, unfortunately he got to the point that I think he honestly just got burnt out and just was like, dude, I can't do this anymore. And I understand that to an extent. I do. He was really, really good with the consolidation and being able to lump sum work out of, hey, if you have 15 G's of credit card debt, all right, we can go ahead and get it settled for 5 and, do it as a one-time payment or set it up over like, a 2-3 year period. He's kind of gone the way of the dinosaur. So it's there probably is an opportunity there, because that's one of the other beautiful little things that just came out. Consumer credit lines have never been this high ever in the history of ever. And it's literally right at $1 trillion right now that's out on consumer credit lines. That's not mortgages. That's not car loans. That's literally like, you're just swiping at Circle K. You're buying a Mountain Dew and a pack of smokes, or whatever you want to get.
So I wanted to ask this earlier, and I want to just go back through the short sales. So short sales, for everybody, if you did not watch our previous episode with Matthew, the bank is selling their property for a loss. They're shorting the house. Matthew, with loan mods, I know that you've been able to do a short sale in 24 hours, as quickly as 24 hours, because you have connections and you've been doing this for so long, you know the process. How long does it take to get a loan mod approved? And do you have to start it at a certain time? Can you do a loan mod 24 hours before the auction?
So usually this is what they're going to look at. They're going to look at, does it make, in their mind, they've already done their valuation of the property. And sometimes it's just a drive-by, or sometimes it's just, an algorithm. It's Zillow or, something of that nature, RPR, whatever. If they think that it's advantageous for them to just foreclose on it and then turn around and put it on the market and move it, or move it into rental inventory, depending on what their mortgage-backed security paperwork looks like, they're most likely not going to postpone that. But your best bet for postponing a foreclosure sale, if this borrower hasn't already gone through it, is a loan mod. Why? Because it benefits the bank. It keeps them on the hook and they're paying. Short sale, the bank's like, yeah, whatever. Like, okay, we're avoiding a couple costs. Mm-hmm. So they're not as motivated to postpone the foreclosure sale. If they're getting paid in full, or all the arrears are being caught up, and then, the property's being sold or something of that nature, okay, yeah, they're fine with that. But that loan mod, like, hey, if they can get somebody in, even if that person gets in and only makes 6 more payments, right? Think about 6 more payments and $1,500 a month in interest just on that loan. Okay, like, they just cooked in another $9,000 into their portfolio than had they not. And like, this is the thing that's wild with the loan mods. They'll have you go through it, and usually on average, you should be able to get a loan mod done in about 30 to 45 days. You should. That being said, it depends on the bank and depends on who owns the back end paper, who actually is the owner of the mortgage. If it's Fannie Mae, Freddie Mac,
so
FHA.
It depends on the lender typically. How long does it take? I mean, when should you start doing the loan mod process? Can you do it 2 days before? Like, are they kind of like, dude, you're at the end we're already overwhelmed by all of these mortgages trying to be refinanced?
I usually tell people start it at least 30 days before the foreclosure sale, before a sheriff's sale, a notice of trustee sale, depending on your jurisdiction, like start it at least 30 days before. With the short sales, for example, I tell everybody I need a full package, purchase contract in hand, and everything submitted to the bank no less than 40 days before. And the reason why is, and this is like the most bass-ackwards thing I've ever seen in my entire life. Our wonderful friend called the Consumer Financial Protection Bureau, CFPB, has a guideline that says for a property to be short sold, all applicable paperwork needs to be in 37 days prior to the foreclosure sale date. So this bureau that's supposed to be protecting the consumer, which is the borrower, is sitting there saying like, dude, if it's 30 days before, yeah, sorry, tough. Like, we're just going to foreclose on you, and we're going to go ahead and let our good friend over here, Bank of America, just go ahead and auction your house off. Like, it goes back to what I was talking about. Like, the bank doesn't do anything.
What's in it for them? Yeah,
exactly. What's in it for them? So the loan mod is the good way to move it forward and get it postponed. And the other thing that happens with that I tell people, okay, if you're working with a seller and say the seller is in a position of, all right, I'm going to do a loan mod, but in the back of their mind, they're like, dude, I'm out of this house. Like, I know that they're not going to approve me. I want to do a short sale, get everything ready for the short sale and get it in right now anyways. And then they can call and say, look, I want to cancel the loan mod. I want to move forward with a short sale. And a lot of times they'll do that where it's
that's like evidence of like incremental
correct
bits that they attempted at trying to make it.
It's the waterfall. Like we've gotten to the rocks now. Like now we're down to the rocky shit. Like we're at short sale and foreclosure. That's it.
Yeah. So we have a question from Justin who says, are banks being more aggressive to foreclose? I'm going to assume because of interest rates. Like let's say, it's so low that at the end of the day, it's not beneficial for a bank.
So they want to foreclose on the old rates that are like 3%, so they can go and get a new loan on the house for 7% or whatever. Do you see that?
The banks, and this is where we get into the part that's
conspiracy theory.
I won't say I've gone completely down the right side of YouTube, but I'm getting pretty close on this. So here's the thing, and let's just think about this realistically. If a bank is making 3% interest on a property, and the bank is trading paper with another bank right now at 5% because of where the Fed funds rate is, we have negative 2% right there. This paper isn't worth shit anymore. In the bank's world. In our world, we love that paper. Like we love that 3%. I want to have that mortgage for the next 40 years. The bank doesn't though. The bank, like what is the true benefit for the bank? Bank's not. Think about it this way: for every one loan in the new market that we have, the 6 to 7%, they have to have 2 to 3 loans at the 2 to 3%. So think about it. Yeah, they can cook off 66% of their portfolio and just replace that 66% with literally, 33% of the new, the new interest rate, and they're performing the same. Actually, they're performing better. So that's for me. Like when I look at that, I'm like, shit. That's kind of like I've gone behind the curtain and looked and been like, oh God, I don't like what's back there. So I'm seeing them look at it more realistically of, look, if we think that we're going to make money on it, we're going to push it through. And we'll let it turn into, we'll let it turn into a foreclosure asset and we'll go ahead and resell it. Same thing goes for the short sale side of them being more motivated to do short sales though, because at the end of the day, short sale, foreclosure, in a bank's mind, it's kind of the same because either way, the asset's being sold and the loan's being extinguished. So there's going to be a new loan on the other side, and that's what they care about. They care about picking up that paper versus servicing the paper that's way below what the market is right now.
Ingrid, do you want to ask this next one?
Well, I was just, so the question with Joel and do you think sharing your link tree is the best approach, Matthew? Because he's asking, can you work directly with short sale agents or agents doing foreclosures?
Yes, absolutely. I have a lot of agent partners that I work with all over the country. And a lot of people will bring me deals and be like, hey, I found this one. And the agent on the other side will be like, look, like, I have a good idea of what's going on with the short sale. I'm like, cool. I'm like, who's your investor on the loan? And they're like, well, I don't have an investor offer. And I'm like, that's not exactly what I was asking. And then all of a sudden, like, once we kind of get talking, they're like, yo, like, this is all right. Yeah. Like, I want to go ahead and have you help, because again, like, at the end of the day, and this goes back to my original short sale days, yeah, I might take 1% off the top, but you know what? 2.5% or 2% of something is better than 100% of nothing. So, like, let me come in, let me go ahead and help you out. That's all it comes down to. As long as the
wholesaler?
What's up?
Can a wholesaler work with you?
A wholesaler? Yes, absolutely. We get a lot of properties from wholesalers as well, where they come in, and what we do there is twofold. Number one, if they have an agent relationship that they like, we just tell them, like, hey, your agent has to agree to work with us, but we'll have them list it. They can double end it. If their broker doesn't allow double end, then we can figure, something else out. We can have another agent represent, whatever, to meet the bank's requirements. Or if it's a situation where they don't have an agent relationship, then we just work with a partner agent in that area and then have them do the bank compliance part with listing it and everything. And then we have the wholesaler submit an offer to go ahead and purchase the home. Okay.
And can a wholesaler work with you to just help the seller and not necessarily make an offer?
Yes, certainly. And we have a lot. I literally got one in, I want to say it's Louisiana. Don't quote me on that, but I think it's Louisiana this morning, where the guy was like, look, it's rural. It's in the middle of nowhere. I just want the seller to get help. Like, dude, will you just take care of it? And I was like, yes, absolutely not a problem. He's like, thanks. He's like, I don't need anything. I don't want anything. He's like, I'll get on the next one with you. He's like, this just isn't kind of in our portfolio. And I was like, hey, I'll go ahead and help him out. Not an issue.
Yeah. And then there's the link on your link tree that says nationwide short sale help. Is that how people get a hold of you then?
Yes, that's the easiest way. It comes right into my email box. And I will personally be the one that's responding to it right out of the gate. It's nobody else. It's not automated or, a VA or anything. It's me.
So how does a loan mod affect the owner in terms of credit? Are you familiar with that?
It's not necessarily a new loan, and it's not necessarily a new credit pull. What actually affects the borrower on that is any missed payments up until the loan mod is made. Because every time you miss a payment, you go 30-day, 60-day, 90-day late. That's what brings your credit score down. It's not really the loan mod. It's not even the short sale. And actually, the thing that's funny about that is your credit score will be doing this during the process. And then as soon as it's done and it's completed, usually your credit score goes up, even including a short sale. Like, I have people that are like, dude, my credit score went up 30 points. And I'm like, great. Like, you might want to hang tight before you go get a credit card. Just saying.
Okay. So Matthew, how many people have you been talking to in the last week because of everything that's happening with the banks?
On average, 4 to 5 actual sellers that are in short sale situations.
Is that normal or is that higher?
That's much higher. I would say I was probably doing 4 to 5 a week. Now I'm doing 4 to 5 a day.
Wow.
So I mean, you're talking about a what is that, 500% increase? So I mean, it's
that's very 2008 vibey for sure.
Yeah, like I said, it's kind of one of those things. Like, I even had like a moment at the kitchen counter the other day where Nicole looked at me and she's like, "Ah, shit, you're emotional right now." And I'm like, I'm like, it's I'm like, I know that I will be okay. And I know that my skill set is going to help a lot of people. And that I'm grateful for. It's just, I don't want to see anybody actually have to go through what we're about to go through. And that's the thing that sucks, because it's like I said, I mean, from 08 through 2013, I pretty much dude, I'm not going to lie. I pretty much ran off of Monster and nicotine. Like, that was it. Like, dude, I used to smoke. I don't anymore. I'm healthy now. But it was one of those things, like, I think I slept like 3 hours a night, because like the other thing is, it's not even just from my horrible habits at the time. It's because I'm sitting there and I'm thinking about this client. I'm thinking about this client. I'm thinking about, crap, there's a foreclosure sale coming up in 3 days. And like you were saying, Carolyn, like, crap, like, dude, they got 4 kids and they're still living in the home. Like, I need to
So
either make it
Matthew?
happen.
Are we gonna start teaching more agents how to do this? Like, how do we build up a band, and how do we, like, you know, get an army? Or I shouldn't say a band. I should say an army of people who can help.
I think we're honestly probably going to have to do that. And like, I've already noticed it. Like, we have several people that have reached out to me, and they're like, look, like, just let us know what we're supposed to do. Let us know, like, give us the package, give us like just some training, and we'll go beat the doors in those areas, because it's coming. And like, 2 of my favorite agents that I did business with in Atlanta, forever. Like, I still do business in Atlanta with them. They messaged me, I want to say it was like a month ago, and they're like, yo, you guys are still doing short sales, right? And I was like, oh, hell. I'm like, yeah, we are. And she's like, we're really starting to see a lot of homes coming to the foreclosure steps.
Yeah.
And I was like, do you guys still only foreclose on the first Tuesday of the month in Georgia? And she's like, your brain is a scary place to live. And I'm like, yeah, it really is. You probably don't want to be there. And she's like, send me over your package. She's like, we're going to go ahead and get to work, and we'll start sending them over to you. And I was like, okay. And like I said, like, to me, that's very 08 vibey, because these are grizzled veterans in the real estate industry. Like, we're talking people that have been selling houses since the 90s. And they're seeing it. They are. They're seeing that the writing is on the wall, that there's going to be a certain population and segment that's going to need to do it. Like, it just is what it is.
It's the best solution when you're this far down the line and you want to, like, not set yourself up for failure forever, or like not forever, but like really crushing you. And just, I can't imagine going through a foreclosure all the way. I know we are at time, Matthew. I appreciate you coming on. I want to kind of rattle through these questions really quickly. Lenny just said, shoot. So the buyer who takes over the property in a short sale, it's always cash or a new bank loan. The buyer doesn't simply take over the old loan and interest rate. So I think we could kind of also answer that, Ingrid, but Matthew, I'm going to let you answer your side.
Correct. So on a short sale, you're shorting the lender, and they're extinguishing the underlying debt and any liens and loans and things like that. So it's going to be cash or, new financing, conventional FHA, VA. It is open to all different types of financing as well.
If you want to take over the old, like if you want to start making the payments on the old loan, the interest rate, that would be a subject to transaction. So you're not doing a short sale. Short sale is a different way to go through this. Let's do another one here. Soaring said, is there a minimum time from foreclosure you'd need to efficiently help them, days versus weeks away from foreclosure? So let's go back to the example I had of the family last week. Got a hold of them Sunday night. They were open to talking, and I'm like, well, you can't do a loan mod. 37, like I was told you need at least 37 days to do a loan mod. Can't do that. They had nobody that could help them. Look, now everybody's like, I got questions. Everybody's throwing questions in the side chat. We couldn't do a personal loan. They had no money. They had no family that could help them. I'm not recommending bankruptcy, because that can be fraud, and you're gonna have a bankruptcy on that person's record. And then they didn't have enough time to list it because their auction was on Tuesday. So is there, like, what do you kind of do when you're 2 days away from an auction? Is there any really solution that you can see, Matthew? And then Ingrid, you can chime in too.
Creative finance, baby. That's the only one I can think of if you don't have time for a short sale. Like, that's the trigger. And to your point, Caroline, you just have to be tenacious in explaining why it's in their best interest. In fact, you're actually going to build their credit back up. I've done it now. Like I've done a few people. I've done a few people. Sorry, that was so bad. But I've helped a few sellers who put themselves in a bind with bad credit as a result of not paying their mortgage. But because we took over their mortgage, now their credit is much, much better. So it's the only thing I know that you could really stop right away, other than cash.
Absolutely. So for everybody on here, should we just immediately go straight to terms? You already know it's too late. When you're talking to a seller in this situation, instead of saying I can buy your house for cash, should you immediately just go, I'll buy your house for terms?
Absolutely. That's what I do. That's what I've done. Yeah. And everybody has their own different method. I love the fact that you said you have the mom voice. I don't know how it is, but if people do need a closer, contact me. I'm happy to help you talk to your sellers or talk to your agents, because I've been through this, and no third-party story will help you more than I've been in your shoes. I went through that experience. Here's how I help you not land where I did. And it goes back to the team perspective that Matthew talked about, because now it's like, I've been there, let me help you. It's going to be us together versus them going on through this journey without you.
100%. You nailed it. The only other thing that I found, and this is obviously, I'm not a lawyer, I'm not going to give legal advice. The only other thing that I know is the guaranteed will stop it and halt it. And it's for your sellers that are just completely, really, really jammed up spot, is filing bankruptcy. That's the only other thing, which, again, I'm never going to make that call for people and be like, hey, you should file bankruptcy. Like, nope, that is not my call.
Yeah. I honestly, Caroline, I understand what you're saying. If they're using it as a tactic to just stop the foreclosure, that is considered fraud. But there are scenarios where bankruptcy should be their next step. I agree with that. Like, I got $20,000 in credit card debt. I got a car that I can't pay. I have a house. Like, I mean, you're actually, like, bankruptcy is a tool to be used. To Matthew's point, you have to make your own decision, and there will be a process. I was talking to a young man in Maricopa, super talented sales guy. I was like, hey, whichever way this goes, I want us to talk, because I think you would do really well in sales with me and in this real estate world. He's totally for it, but he already assessed his situation. He's like, no, I'm going to go through the bankruptcy process, because I have ways to take this bankruptcy off my credit within 2 or 3 years.
That was my next question. How can we do that?
Yeah, there's all these tactics. I'll be honest with you, I don't have any advice or any sort of like experience in that, but there's tactics where bankruptcies can also be mitigated after the fact. And they're not always successful, but there are ways around it.
Thank you for that insight. I mean, I was on the phone. I actually spoke with Laura because I was talking to her about, after door knocking those houses, I'm like, what can I do? I knew that you were on vacation. So she was just like, don't recommend that. That can be a situation where it can get fraud. I know, just so I'm not doing it, but give them, like you said, Matthew, you can recommend they have a conversation with a bankruptcy attorney and see if that's the best option for them. And also to your credit, Ingrid, we don't always know their situation. What does their credit look like? How far into debt are they? Are they in more debt besides just the house? Okay, let's get through a few more of these. Evan said, I'm sorry if you have already asked this, but if we bring you a short sale, will we get the first chance at buying the property once it's negotiated? What fee would be charged?
Yes, and nothing.
Oh,
easy peasy. So ultimately, the bank makes the final decision in everything. So they're going to be the ones that are going to determine the final sales price. If it works with what you're trying to do with the property, you buy it. I'm getting paid via a referral agreement with our partner agent that lists it so that we meet bank compliance. And everyone that brings me a deal, they're always the one that gets the first rights to the property. It's like, hey, Ingrid, thanks for bringing this property over to me. Do you want to go ahead and submit an offer with our agent, Carolyn over here? Will that, do you want to submit? Yeah, I do. My offer is going to be ridiculously low. That's the other thing I'm going to tell people. Do not feel bad about your initial offer. Just submit the damn thing. Do not feel bad about it, because the bank at the end of the day they're in the driver's seat. They're going to let us know whether or not it works or whether it doesn't.
All right. Follow-up question. What's the advantage of doing a short sale rather than SubTo? Matthew, I'll let you go first, and then I'll let Ingrid and I wrap that up.
Yeah, got it. So again, this really goes to what the seller's position is and where they are in life and what they're trying to do. There are certain loan types that are never going to work on a SubTo. The biggest one being a reverse mortgage. I've never seen somebody be like, hey, all right, I did a SubTo on a reverse mortgage. They're probably going to, they're probably really going to regret that really fast.
Yeah.
So it really does come down to the seller, because like, let's be honest, there's a lot of sellers, especially once they're in a position like this, they may be in a position of, look, I'm just done with the property. I need the loan out of my name, whatever. And kind of to what we were just talking about with bankruptcy, the last thing you want to do is get a property SubTo and then have them file bankruptcy, because that's just going to be a disaster for you. So if they're in a pretty jammed up financial position, but they could be in a better position after completing the short sale and maybe get rid of those consumer credit lines and things like that, or pay them down and be in a better spot, that's going to be a huge benefit for them right there.
Okay. Let's see.
Is there a law that says you can't profit from the short sale if you're helping someone?
I think what maybe John is alluding to, and I don't know, maybe he is, maybe he isn't, it might be the MARS Act from back in like 2012, and that's the Mortgage Assistance Relief Services Act. What that is you cannot charge an upfront fee to a borrower to do a service that is free for the bank. For example, loan mod, short sale, things like that. That being said, there is no reason that you can't profit from a short sale. So for example, you can buy it and you can turn around and profit on it. They have no issue with that. They might give you deed restrictions that say, hey, for 30 days, we want you to hold it. And then you can turn around and sell it for 120% of your acquisition cost. After 90 days, we don't give a crap. You can sell it for whatever you want.
Gotcha. Okay, you got the next one. How will we wholesale with you? What is the process like with short sales compared to foreclosures? A lot of short sale agents, for example, Nicole Espinosa.
Got it. So with wholesaling, this is the thing that I'm going to tell you with short sales. The bank is not going to take assignment verbiage on a contract for a short sale. They're just not. It's kind of their what is it? It's like their number one rule they won't do. So what I usually tell people is JV with somebody that you trust and you have an agreement in place. Have them take the property down and then turn around and sell it. You might be involved in a double escrow or something similar to a double escrow. You might have to hold it at 30 days. And those are the things that we always try to take into account when we're looking at it and running numbers. Because more often than not, once I'm in the thick of it with the bank, I'm going to know whether or not there's deed restrictions. If there's deed restrictions and you have $5,000 of carrying costs for holding it 30 days, we're going to want to factor that into whatever you're buying.
Offer is. Mm-hmm.
Yeah, whatever your offer is.
Okay. I think
Awesome.
there is, yep, you already saw it. Corey has a great deal he wants to send over to you. So guys, reach out to him on Instagram. There's a link tree, MatthewPotterRealtor. I'll share it one more time just so everybody can see it. And then let's see, here it is. Here is his Instagram, MatthewPotterRealtor, and there's his link tree. You can message him on Instagram as well. So I hope that was helpful. Okay. Ingrid, I know you're down to 75 hard, so I don't think you're in a rush to drink some more water.
I don't have to pee.
I wanted to show really quickly, guys, because Ingrid and I are really trying to grow this so we can help more people. Matthew, I know I made you a YouTube last time. We need to get people onto your YouTube, so I'm going to show you guys really quickly, everybody. If you would, check this out. We are, okay, I had to go through a different window so I could show everybody this. So when you come over and you should click the subscribe button so you can know when we're going live with Matthew again or in the future, click subscribe. And then right here on this little drop down, click all. So every time we get an alert that every time we have something that's going to go live, you get alerted. So this is, you already know my channel at TheCarolineCain. You can look up Ingryd Hernandez and see her here. Same thing. You want to just go, oh no, where are you, Ingrid?
I don't know. ¿Qué pasó?
Oh, wait, because it corrected your name. It took away the Y when I clicked on that. Ingrid.
Oh, how dare it.
Right?
Well, while she's
there it
fixing
is.
that, there I am.
Boom. Get all the alerts, and then Matthew Potter.
Hey.
And it should be Short Sale King. Let's see. Where is it? What did we do? I don't even know if you've added your photo on there yet.
I haven't done anything
right there.
yet.
It's right in front of you.
This is not him, though. I made him one that says Matthew Potter Short Sale King. This is just a random one.
Did.
Oh, no. Now I got to find it.
I'll work on it. This is me, dude. This isn't you. This is me.
I do want to call something out. So myself and Matthew are part of the same group at Real Brokerage. We're part of the family tree. Yesterday, in fact, we had a coaching call. Unfortunately, I couldn't make it. I was double booked. But it's one of my favorite calls because we share different ways to make money as an agent. And in fact, I'm going to be on a podcast later this month with JJ Aziz, where we talk about what it was like for me to go from traditional agent to now licensed investor. That's the way that I market myself, because there's so much fear that comes from being an agent. And like, I even see it in a lot of the questions we get from people who are licensed, where they're like scared of everything, which I understand because that's sort of the mindset that you're trained, where it's like, don't make the wrong move or you're going to get sued. So it's been interesting being around folks like Matthew and Pace that help expand my mind and stop being so fearful. So anyway, we would love anybody who's a licensed agent to consider coming with us. You'll have amazing calls like this one on a weekly basis with Matthew at the helm, Ryan Zolan, and sometimes I butt in on giving feedback during those coaching calls on Tuesdays. So yeah, just wanted to make sure I plugged that in.
I love that.
You do.
Go ahead. I was just going to say, I took the time. I'm still logged into your YouTube channel I made for you. So I have it right here.
She's going to have that thing up to like 5,000 subscribers in about 10 minutes.
Hey, there you go. But I added a photo. Look, I just added your Instagram photo on there. So here's Matthew. It is Matthew Potter.
There we go.
So that is it.
I'm gonna get to work on that.
He has no subscribers, guys. So please go follow him on YouTube if you got any value. Help this man out so we can get an actual URL. I'm going to copy the URL so you guys can have access to it. But go ahead, Matthew, if you want to chime in on the family tree stuff.
Yeah, so a couple of things. Like, I've been watching this chat, and I appreciate you guys tremendously for inviting me on. And I'm always happy to be a repeat offender, especially as we kind of navigate further and further into this new market, because I think there's probably going to be a good need for all of us to be able to work together. And I'm excited for that. One of the things that I noticed was Evan commented over here, I know a short sale negotiator whose model is they negotiate their fee with the bank as a separate fee on the HUD, and then they also charge 10 G's on top of that to the buyer. I'm going to let you know that I'm the most underpaid short sale negotiator on the planet, and that's the way I plan on keeping it. I would never do that. I've seen people that do that, and to me, that just reeks of, number one, a non-abundant mindset, which that's where I always come from when I'm doing this, of like, I would rather do 100 deals than sit there and do 5 deals. And the other thing is, if I'm charging you 10 G's as a buyer, like, good God, like, what? Like, why in the world? Like, that's a lot of money. Like, that's really going to mess up your spread. Like it is. So I just wanted to touch on that. And then I saw one other thing. Maritza had asked me what state I'm licensed in. So my main state is Arizona. I am licensed in Arizona. I'm also licensed in North Carolina, Nevada, and Georgia. So those are the states that I'm licensed in right now. I don't plan on adding any more to my continuing education, cycle of fun there. But I mean, if it became advantageous, I would, but I'd rather just have more agents join us in our network, and that we can just all work together and collaborate on. I think that's just a better way to do it personally. And even like if I get short sales in North Carolina, I'm not listing them. I'm having a partner agent do it on the ground. So yeah.
Well, thank you for all of this, Matthew. Again, thank you for jumping on here. You have 3 subscribers on YouTube now, so they can't wait for you to start producing more content. Next week, I'm waiting to hear back, but we're going to be talking about more foreclosure stuff. If you can tell, I am just trying to zero in. If we can help more people, karma comes around, guys. What goes around comes around. Take care of people. I've been talking about this nonstop since the beginning of the year. And today on one of my Zooms that I do in the morning, 3 people stopped an auction in the last 2 days, which was just so exciting. So guys, there are people that need help. Go do something kind, pay it forward. Matthew, thank you. Ingrid, thank you. I think we're out of here, guys.
All right. Have a good one.
Bye,
Thank you
everybody.
for having me.